After 8 years of trading price action and 5 years teaching how to trade, I'll give you 2 methods on how to draw consolidation phases and why I think these are very efficient, where I see even students get very fast results with it. The first method is to understand that we want in general to catch most candles, but the first method is that we include the highest and the lowest wick. That means when you can see here, for example, here this spike here, how the market spikes up, spikes down, goes back up. We use and place the trading zone starting here to the lowest part with our goal to catch the most candles available to the right side, as you see here outside. This is the first method. And this is something what's very efficient, because now it's about just to catch as many candles as possible. And it shows us in this area, the market is most likely wiggling around. The market is less pressuring in a direction, except the market is going to make a lot of green candles, a lot of length in that direction, that you can see a lot of very obvious pressure. But in most cases, we will find here less pressure, and it is not just that worth it trading in those areas. The second method is, instead of using the wick, so in the first method it was here, as you see here, for example, here with the wick here, for example, also here the lowest part, and then here the highest part, here highest part, lowest part, and then here catching here a lot of candles. Here you can see we're not catching a lot of candles, so it's not that good. We want to catch here the most candles as possible. Maybe we can also do it like this also, with the wick here, a lot of candles, and now you see how the market goes out and in. The second method is to use more the candlestick bodies. I will show you an example. Instead of doing this, we could do around like this. So we still catch here a lot of candles. Instead of doing this or this, we can get more lower and do this. So now we're not that much into structure with the move where the spike down to spike up it is out. It's more about like, where do we see that we find here the most candles? What I really like, because here in the middle you find when we go a bit more down, you find here that we catch here more candles. It's more about to go where the candlestick bodies are. And you find here a red and a green candle. I really love placing it on these candlestick bodies, on the close and the open. You find here red and green. Sometimes the open or the close is deeper. That doesn't matter too much if you place it on the red or on the green. It's just like to catch as many candles as possible. Some traders even want to see that it confirms, like it goes out and in and out and in. And for that, in the future, it should show us that it also goes out and in. Some people trade that, but I think it's not that efficient. It doesn't work for me that well. And also for trading students that I met, it's literally more likely, more easier to trade with momentum and money management. But that's another topic. So you can see here now, we used here this trading zone here. And then instead of putting the trading zone here or there on this wick here, or on this wick here, what I meant, we place this here on the candlestick bodies here, for example. Because when we zoom in, you find here also a lot of candlestick bodies. You find a bit how the market goes out and in and touches here the top already. And it shows us just that it's a bit important. And then now on the right side, you see here how we were catching here many trading candles. That means when selling and trading down, for example, it makes sense that the market wants to touch this area. When seeing, for example, the market goes out, then also on the bottom, it also makes sense that the market goes back in. So these are 2 methods. And the reason why these are important is because the market always shows us in the past where it wanted to trade a lot. And when it traded there a lot, then it just shows us that there were traders, they like to trade in this price area, and prices not moving that well initial. That means against those trading areas. And in trading, we make money when the market moves up and we have bought, or when we sell and the market goes down. And in this case, you can see how the market is just wiggling around here. And usually the smaller this area is, that means, for example, if we do here a small area, either like this with the wicks, or we just go here with the candlestick bodies, as I just showed you, like this, then the thing is just in those areas here, a lot of losing trades very often occur, except we have a lot of red candles. We have more length down than length up. We can see clearly that the market wants to pressure through the zone. Sometimes it's in the zone, or it's above or at the bottom of a zone where we can see that the market is pressing through it. I'll show you here a picture, because I just I prepared here a picture that I would like to show you. And you can see here how the trader did this here. Here, for example, you can see here how you have here the consolidation phase. Instead of drawing in now how the trader did, we now starting this video that we can draw it in either like this, the consolidation phase, like here. We can draw in the consolidation phase also like here, like this, like that tiny here. And then now you can see here how the market does here more green a bit than red candles, how the market shifts here higher with bigger structure, right? What makes sense then to trade also in those areas. It's just that it helps us a lot because sometimes you'll find consolidation phases where we have here a lot of red candles as you see here. The market shifts down, what is not that nice to trade. So it's about to compare these, taking pictures, trading only one market. A 1 minute chart I think would be good so you see transparent how the market is looking like. Try that out for your trading and I hope that you can improve using this method.